Welcome to Business with Louis, the show where we break down complex business concepts into actionable insights for aspiring entrepreneurs and students. Today, we're diving into the world of private equity versus venture capital, two investment strategies that can make or break a business. Whether you're looking to fund your startup or scale an existing company, understanding these concepts is crucial. Let's start with the basics. Private equity refers to investments made in private companies, typically with the goal of acquiring a majority stake and implementing strategic changes to increase value. Venture capital, on the other hand, focuses on investing in early-stage, high-growth potential startups, often taking an equity stake in exchange for funding and expertise. To understand why these concepts matter, let's take a brief look at their historical background. Private equity emerged in the 1970s as a way for investors to acquire undervalued companies, restructure them, and sell for a profit. Venture capital, meanwhile, has its roots in the 1940s, but gained popularity in the 1980s with the rise of Silicon Valley. In PE, investors use financial models like the discounted cash flow method to value companies and identify potential targets. They then work with management to implement changes, such as cost-cutting or strategic acquisitions, to increase efficiency and profitability. In VC, investors focus on identifying startups with high growth potential, often using metrics like customer acquisition costs and lifetime value to evaluate their prospects. VCs typically take an active role in guiding portfolio companies, providing mentorship, networking opportunities, and access to additional funding rounds. To illustrate these concepts in action, let's look at some real-world examples. KCR's acquisition of Toys R Us in 2005 is a classic case of private equity in action. The firm implemented cost-cutting measures, renegotiated contracts with suppliers, and expanded the company's online presence, ultimately increasing revenue by 20%. However, the company still filed for bankruptcy in 2017, highlighting the risks associated with PE investments. On the VC side, consider the story of Airbnb, which received early funding from Sequoia Capital and later from Andreessen Horowitz. These investors provided critical guidance, helping the company navigate regulatory challenges and expand its global presence. Today, Airbnb is a household name, valued at over $50 billion. So, how can you apply these concepts in your own business or career? For aspiring entrepreneurs, understanding private equity and venture capital can help you identify potential funding sources and prepare for investor meetings. When pitching to VCs, focus on showcasing your company's growth potential, highlighting metrics like user acquisition rates and revenue projections. For existing businesses looking to scale, consider exploring PE investments as a way to access capital and expertise. However, be cautious of the risks associated with PE, such as increased debt and potential loss of control. In conclusion, private equity and venture capital are two distinct investment strategies that offer unique benefits and opportunities for entrepreneurs and businesses. By understanding the core principles and theories underlying these concepts, you'll be better equipped to navigate the investment landscape and make informed decisions about funding and growth. Research has shown that companies receiving VC backing tend to perform better and grow faster than those without it. According to a study by the National Venture Capital Association, VC-backed companies account for 21% of U.S. GDP and 11% of private sector employment. Similarly, private equity investments can provide much-needed capital and expertise for companies looking to restructure or expand. In summary, private equity and venture capital are powerful tools for businesses looking to grow and succeed. By grasping these concepts, you'll be able to make more informed decisions about funding, strategy, and growth, ultimately increasing your chances of success in the competitive world of entrepreneurship. If you have any questions or topics you'd like us to cover, please don't hesitate to reach out. And if you're interested in learning more about private equity and venture capital, I recommend checking out some of the resources we've listed on our website, including books like Venture Capital and The Finance of Innovation by Andrew Metrick and Ayako Yasuda. Remember, every great business starts with action. Make your next move count. Like, share, and subscribe. And remember, every great business starts with action. Make your next move count.